After Pillar 1, Pillar 2, Faceless Assessments, now we move on to the last technical session, which is around return scrutiny, audit assessments, implication of GST on international tax, international trade, so all around IDT. And for the session, I would like to invite our moderator, Sandeep Chelana, Managing Partner, Chelana & Chelana Law Offices, Harun Sir, Vice President Taxes, Genpact, Alok Parikh, Head of Tax, Discovery India, Lalitendra Gulani, Partner, Nantam Legal, and Saket Patavri, Executive Director, Indirect Tax at Next Time. Thanks to all of you for agreeing to be here with us. I would request you all to please join us on the dais.
Saket, chalo.
So quick background on the esteemed panel that we have. Sandeep Chelana is a 2005 law graduate and has been practicing IDT since 2008. He specializes in tax planning, advisory, and litigation support services, primarily in the areas of indirect taxes, inter alia, including GST, customs, excise, erstwhile service tax, and VAT. Thanks, Sandeep, for joining us today. On his left is Saket Patavri. He's the Senior Director with Next Time and leads the indirect tax practice. He takes care of the litigation, corporate and consulting, all aspects around IDT. Extreme left on my side, Harun Qureshi, sir. He's a chartered accountant by profession, having over 30 years of experience in the fields of finance and taxation in financial services, ITS industry. Thanks, Harun, sir, for joining us today. Alok Parikh on the right side of Harun, sir. He's a qualified chartered accountant, CS LLB, with around over 10 years of experience in the field of taxation, both direct and indirect tax. Thanks, Alok, for joining us. And Lalitendra Gulani, partner at Anantam Legal. He holds rich experience of close to a decade in the fields of indirect tax and international trade. He regularly advises Fortune 500 companies on various tax matters. Thanks to all of you, and over to you, Sandeep.
Thank you, Ashish. Thank you, everyone, for taking out time for this session. There are various critical issues that the industry is facing today in GST, even after 5 years and more than 5 years of GST coming into force. And lack of clarity is something which has burdened the companies with additional cost of compliance and litigation. We'll try and cover some of the most important and critical issue that the industry is facing today. And to start with, I think one of the critical issue that most of the international as well as domestic companies are facing is with respect to intermediary services. Now, various BPOs, IT, ITS companies as well as other companies which are providing either marketing support to their parent companies or in any other manner providing managerial support services face a challenge where the services provided by them are alleged to be intermediary services by the GST authorities. Now, in this regard, I think I'll start with Mr. Qureshi because his business also is very close to the kind of challenges that the GST authorities raise. So, Mr. Qureshi, what is this concept of intermediary for the audiences to understand, and what is the correct legal position around the intermediary services? And where are the challenges that the industry is facing around intermediary services?
Thank you, Sandeep. So, intermediary services as a concept came in 2012. I think before that the concept did not exist. And I would think the way it was brought in, and if you look at the definition, strictly speaking, it should really apply to brokers and commission agents. Now, of course, over time, the revenue authorities have tried to expand the definition and tried to cover various services which are strictly not even close to being brokers or commission agents. But that's where we are. So this came in 2012. There was an education guide which actually laid out some useful guidelines on how this should be interpreted. I think things were going pretty well. There were isolated cases of basically exporters of services being regarded as intermediary, but fortunately many of the CSTAT judgments went in favor of the companies. And then GST came in 2017. Now interestingly, the definition of GST, of intermediary as per GST law was exactly the same as the definition in the service tax law. However, with the advent of GST, the tax authorities, at least in a few cities, and Gurgaon being really one of them, started reinterpreting the definition and basically saying that any three-party arrangement amounts to an intermediary. So actually, if you look at the definition, I will not go over the definition, I'm sure all of you have seen that. But actually, if you look at the definition of intermediary services, any principal to principal arrangement, even a subcontract arrangement, is really outside the ambit of intermediary. While it is sort of inclusive, it says also says by any other name called, but I think you have to really see it within the context of where it's coming from. There was a circular, this litigation started, there was a circular issued in 2019. The circular actually created more confusion. Industry objected to that. The circular was withdrawn in a few months' time. And then thereafter, nothing happened for 2 years. There was a lot of lobbying happened by the industry, but nothing really happened for 2 years. Litigation kept on piling up. I think September 21, finally a very good circular was issued. It covers the issue very comprehensively. It clearly says that a subcontract is not in the nature of intermediary. That was issued. I think, however, the litigation just continues. In fact, it has just gone up after that circular was issued. So there are cases pending in the High Court. I think High Court, while the CSTAT had given some very favorable judgments for taxpayers, I think the matter under GST has just reached the High Court. I think Punjab Haryana High Court has reserved judgment in one of the matters. So we'll have to see how this settles down. But as of now, I think we are really seeing on the ground a lot of efforts being made by tax authorities to really push the envelope and try to bring in a lot of services within the scope of intermediary and deny the export benefits.
Right, sir. And in fact, in the recent past, sir, as you said, that while the intention of the circular was to reduce the litigation, in fact, the authorities have started using that very circular to interpret it in a manner where even the subcontracts to Indian subsidiaries are being deemed as intermediary on the account that they argue that because there is a control on the subcontractor as to how the services are to be performed, they will qualify as an agency. In any case, obviously there are even more challenges when it comes to software industry. Thankfully, as you sir rightly said, that CSTAT has been very understanding on the issue. I had an opportunity to argue a case which involved reselling of softwares, which is a concept which otherwise usually is not appreciated. And the CSTAT held that reselling of software on your own account is a principal to principal services. Even though the license of that software, it was a Microsoft software there, was directly moving from Microsoft to the end user. And the court held that it would not qualify as intermediary services. So courts obviously will have to at the end of the interpret these issues. But my question then, sir, would be what precautions should the industry keep in mind while entering these agreements? And Mr. Qureshi, again to you, especially intercompany agreements with respect to either provision of services or subcontracting a portion of, say, software development kind of services to ensure that these services are outside the risk of being treated as GST. Are there some parameters that the industry can keep in mind to avoid these challenges?
So I think, honestly, I think it is a little difficult to sort of look at a crystal ball at this stage and really say, because we don't know how the High Court will interpret this. Hopefully the High Court will pass a very detailed and speaking order and lay down guidelines on what should and what should not be intermediary. But yes, I understand that obviously things cannot be at a standstill while matter is in courts, and even if the High Court does reflect on this, there is a possibility this may ultimately travel to Supreme Court, which may have its own timelines.
Correct.
But in the meantime, and I was just reflecting on this, I think certain precautions can certainly be taken, which really stand out as certain things maybe the industry never focused on. I think it was always regarded as if the intermediary is something which cannot happen to us. But it actually, the definition started off with commission agent or broker, and people thought that maybe we are not commission agents or brokers. No one actually ever thought about this. But I think, yes, of course, going forward, what we should really look at is, I think our agreements should clearly say, and especially if those agreements are with intercompany agreements, because that is what the revenue authorities are really attacking. Agreements should clearly say that this is a principal to principal arrangement. And while it may be, it can be a subcontract agreement, and thankfully the 2021 circular clearly says that a subcontract cannot be intermediary. But I'm sure it will be very helpful if the agreement not only says it's a principal to principal agreement, but also if you look at the clauses of that agreement, I think those clauses should also bring out that kind of relationship. For example, many of the subcontract agreements, especially because these are between affiliates and between the Indian company and the US parent, a lot of clauses get built into this, which require the US parent to exercise a lot of control over what is really happening in India. I think that is something which some of the authorities are really trying to question, that how can you be an independent principal to principal service provider if there is so much control happening. So I think that is something we should really look at. Of course, we have to safeguard the interests of both the parties, but within that, we should try to make this as arm's length as possible.
Right, sir. No, very helpful. Alok, Saket, Lalitanji, any other precautions which you think can be taken to ensure that the transactions which are otherwise reselling services or reselling of goods on principal to principal basis are not considered as intermediary services?
So before coming to that point, I would like to emphasize on what sir has mentioned about having the principal to principal basis arrangement. So my key advice on this part would be the tax teams and the legal team should sit down and draft the agreement thinking that it's not your group company, it's a third party. So each and every clause should be very independently drafted, and automatically it's going to reflect as a principal to principal basis arrangement, and then even the tax authorities are in some sense right to allege that it's not a principal to principal arrangement, but when it is drafted as a third party purely, then such issues will definitely be taken care of. Sandeep, can you please repeat? I was in my thoughts. Can you please just repeat this last point in the question?
So primarily the question that I was on. So in addition to the precautions that sir said, which obviously I think you are resonating that, if the agreement is clearly bringing out the principal to principal relationship, obviously within the framework of the commercial negotiation between the parties, it would help in establishing that it is not an intermediary. But in addition to this, is there any other precaution or any other suggestion that you would have to ensure that there is a better case to argue that the activities are not intermediary in terms of agreements between the parties?
So the agreement should spell out in a sense like at arm's length basis. Of course, the term has been mentioned by Arun sir, but the payment should be at arm's length basis. The payment should not be just on ALP basis looking into the softwares which are available. But today if I sit down to make a transaction, are there any other third parties which are available in India or offshore providing the very similar kind of services? Just a Google research of that should be able to provide me what price I am going to pay for it. So this is an area which I think which again goes along with the third party arrangement kind of setup, basis which we can always argue that this is not an intermediary service and it's going to be an independent relationship.
So Lalitanji, anything from your side?
Yes. In our practical experience, what we have seen is that, practically speaking, there is even if you might take any of these precautions, at the end of the day, the adjudicating authority, what he sees is that if there are three parties involved and there is supply of goods, whether through that agent, whether through the Indian entity or bypassing the Indian entity, at the end of the day, they end up raising this issue of intermediary services. And equally glaring is the scope of the OIDA services, which always remain in contention. But what I find is that usually all of these agreements have a clause which state that the activities that the entire agreement that has been drafted between the Indian entity and the foreign parent is on principal basis and not on the Indian agency. The Indian entity does not qualify as an agent. But increasingly the courts and the tax authorities have brushed aside the nomenclature test and gone to the pith and substance of the agreement. Now, when we see the pith and substance of the agreement, it must reflect the reasoning of Section 182 of the Contract Act. And Section 182 primarily relies upon the fact whether the Indian entity is able to formulate any legally binding obligation for the foreign parent or not. So, in addition to whether these activities being carried out at arm's length, one very important factor would be that all of these agreements contain relevant clauses which ensure that Indian entity does not end up, carving out any legal obligations for the foreign parent. And of course, there are certain areas which always remain to be in dispute whenever probably an Indian entity is engaged in the deciding the prices of the commodities at which the foreign parent will be selling. That is definitely an area which will definitely raise the eyebrows of the tax authorities. Primarily it should be that the concept of agency as envisaged in Section 182 of the Contract Act should be absolutely conspicuously absent from the agreement.
Sure. Thank you. Yeah.
One point I wanted to make here, I think both my colleagues referred to that. I think one of the things which is very important is your consideration should, whatever you call it, it should not be structured as some kind of commission that really the Indian company is earning. It should not be linked as some percentage of some revenue or something. I think that actually weakens your case.
Correct. Saket, anything you would like to add?
Few things. In fact, intermediary, the tax authorities are taking it to hilarious levels. I was arguing a matter before an appellate advance ruling where a liaison office of a chamber of commerce was considered to be an intermediary, and all the cost recharges was considered to be a consideration for an intermediary services. It blew my mind how on earth can this be considered to be an intermediary, but that's the level of that they are going. Now, while the transactions, if it's one is your basic transaction should be kept in mind and the agreement should be exactly in sync with basic transaction. In a lot of cases where it is very clear it's not an intermediary, for example, the example that you gave of reselling of software, etc., probably at some level will win the case, maybe at a later appellate ruling, and it will get settled. One of the most important criteria or important kind of situations that we should keep in mind is, indeed there may be many transactions or a part of transactions which may qualify to be intermediary. For example, if someone is outsourcing the global procurement to say maybe a subcontracting into India to a subsidiary for a global procurement. Now that is something which still can be considered to be an intermediary, but what you are essentially doing is you are supply is not happening to India, maybe some in country A and country B the supply is happening, and you are just trying to identify the best prices and doing them, and so you're negotiating the contracts, and plus you are also undertaking all the backup work also, which is issuing the purchase order and then ensuring the supply happening. Now these kind of transactions, some part of it or all of it may qualify to be an intermediary. So what we should essentially look at is what is the transaction, and in case in an agreement where some part of it indeed is intermediary, it's always better to split the consideration into these two parts so that your exposure is only to only one portion of it. Otherwise, what will happen is they may make the entire supply to be a composite supply or a mixed supply and ask you to discharge GST considering this to be an intermediary. So it's very essential that we actually look at the transaction and accordingly draft the agreements, and if there is a split which can be done, do that split and offer tax on the split, which is actually a case of, you know, clearly an intermediary, so that it will basically ring fence us for unnecessary litigation and we have discharged the tax.
That's a very good point, Saket. In fact, in the practical examples, we have also seen that marketing services, licensing services, customer support services, and all of these services which a subsidiary provides to a parent company outside India are merged into a single service agreement. Some of them may clearly fall within the definition of intermediary, and therefore the whole agreement becomes subject to the litigation. So it is always better that the intermediary part is kept outside in a separate contract, so that at least the all other, you know, market research related services or brand building related services, etc., can still be argued to be not intermediary. So
sorry.
just one second, let me just, in addition to all the precautions, one or two came to my mind while you were talking, and I think they may be important. One obviously is, if the Indian subsidiary is a reseller of service in a sense, and it has the ability to decide the price of the services on its own without any influence from the parent company, and at least the agreement says so, as well as the fact that the obligation to recover the money is of the Indian company, and bad debts with respect to any recovery are the problem of the Indian company, that also goes on and helps to establish that they are principal to principal. So these are the two things that came to mind, I thought I'll share. Yeah, look, please.
Sandeep, my thought is that we should also move ahead of the agreements also. Of course, agreements are in the, is a starting step for the company as well as the revenue authorities to analyze the transaction. But beyond that, today in the era of search, investigations, they are just going to take away our laptops, right? The emails, the laptops of business teams, they are going to make a copy of it. So in substance, what is actually happening should also be a replica of how the contracts are drafted, because basis the discussions and experience, contracts are drafted by the tax or the legal team, and the transactions are executed by the business teams. And usually there is no kind of linkage apart from having some, some call when some issue is struck up. So that is also very important, that the practical aspect should be exactly same what is there in contracts, and only in that situation this issue of intermediary or any kind of agency, this is something akin to the agency issue which we face in income tax also. All these issues can be taken care of.
Correct. Absolutely correct.
I have one point to add.
Sure.
So Alok, you mentioned that beyond the agreement, the tax authorities today have the capacity to unravel or basically seize all of our laptops also, and they might basically contain incriminating points. Now, one very interesting point that I feel that kind of emerges is that one very standard way of securing this entire situation that many of the people adopt while drafting all of these contracts is that by inserting a specific provision by inserting a specific clause in the agreement itself, which says that anything outside the agreement shall not have any implications or bearing on the agreement itself. Now, interestingly, when we see the GST law, it somehow it does not talk about arrangements as it is talked about in the transfer pricing provisions under the Income Tax Act. Now, when we talk about the transfer pricing provisions under the Income Tax Act, now the definition of associated enterprises, it is not merely restricted to, it is not restricted to the agreements that have been forged between the parties. And they go on to cover arrangements, and the courts have on various occasions held that even actions which have been undertaken in tandem can amount to an arrangement under the Income Tax Act for the purpose of, for that purpose. Now, when we talk about GST, as far as my knowledge goes, there is lacuna with respect to the jurisprudence on this issue. Okay, how would you deal with these kind of scenarios wherein probably actions are being undertaken in tandem, and the contract basically very clearly provides that the arrangements outside the agreement will not have any bearing on the nature of the transaction being executed.
Sure, very good point, Lalitanji. Obviously, in absence of, number one, whether because there is a specific provision under transfer pricing laws and there is no similar provision under the Indian GST laws, would it refrain from the GST authorities to still allege that the substance over form of the agreement is different, and therefore your form of the agreement may be something else, but the substance of the transaction is different? I think the authorities are, have been successfully arguing this now, that irrespective of what your agreement say, if the real substance of the transaction is different, they are free to interpret it in the manner that they deem fit. Moving on from this, in the interest of time, I think the second topic that we wanted to cover today was around the increasing number of audits that have started in GST laws. Now obviously there are audits, there are ASMT 10s, there are other notices that are coming with respect to reconciliation, etc. Now, in recent past, we have analyzed that during these audit proceedings, the tax authorities have started seeking information which to a great extent are impractical. For instance, the authorities say that they would want to have a trial balance for each of the location, or at least even each of the states, which the company may not be maintaining in usual course. Similarly, there are other information that are sought by audit teams which otherwise may not either be practical or not maintained in usual course of business. So how do we deal with such requests from the audit authorities, and what are the obligations of the taxpayers in this regard? Mr. Qureshi, if we can have your views on this.
The provisions relating to maintenance of accounts under the GST, actually there is no specific requirement for any registered person to maintain trial balances for each of the GST registrations separately. However, as you rightly said, I think this is now the favorite topic, favorite question that almost all companies are really facing across the country. There are multiple requests coming in, and when you try to explain that we do not maintain these kind of location wise, there is no requirement to maintain it, it is actually seen as some kind of you are stonewalling a request, why don't you maintain this, you should have maintained it. So I think that's lot of industry is actually facing that, lot of advisors are sort of trying to work out solutions, discussions are happening with the tax authorities, but as of now I have actually not seen any audits closed where this issue has been dispensed with. I think if you look at it, the relevant provision is that each taxpayer should maintain true and correct account of inward and outward supplies, taxes paid, ITC availed, and all of invoices raised and all of those things. And if you look at the way the GST annual returns are filed, they already carry a fair bit of information. They are already very detailed. They already carry a lot of information which can actually help the tax authorities in complete whatever audit they want to complete. I don't think there is even any need for a location-wise trial balance. I don't think it is really going to help anything. I think the tax authorities, in some cases we have tried to really engage in a discussion and understand under which provision they are coming, they are trying to say that under section 71, which is really concerning access to business premises, they are saying that we can ask for any document in your business premises which is required for the audit. Now, our point is that all those documents we are happy to share with you, but all those documents are maintained at a legal entity level. They are not maintained, and they are not required to be maintained at a registration level. So I think that is where somewhere, I think this is something which has not yet seen a final resolution. I think once this audit reports start coming in, we'll figure out what happens, and then I think going forward industry will really have to think through that in our ERP systems, is there some way we can address this kind of requirement if the requirement does not go away? And I also think I think it is high time that CBIC should issue some kind of clarification on this. Because at least under the existing provision, this is not really a mandatory requirement.
Correct, sir. I think, in fact, the service industry is the most hit because, maybe the trading industry or manufacturing industry was used to getting the VAT assessment done. And in the VAT assessment, obviously, the requirement of having the trial balance was so accepted that they had moved into this, this practice of maintaining it state-wise. But for service industry, in any case, it is so impractical when the expenses and procurements are happening at the centralized level that it is a big challenge. Alok ji, how do you think these requests should be handled? So one, obviously, there are multiple requests coming from multiple officers. The state GST anti-evasion guy is coming asking for something. ASMT is already pending. In fact, we saw a case where ASMT 10 on the same issue has been issued. Now state GST wants to investigate and DGGI also wants to investigate on the same issue. Plus there is this audit that is happening in which this question will also come. So 4 different authorities looking into the same information, asking for same information. How should this be addressed, and whether there is any reprise in the law itself where I can request that I will only give information to one?
So Sandeep, I think everyone in GST, any assessee who is having a pan-India business is to some extent facing the issues or challenges of getting multiple notices. Everyone won't be getting the anti-evasion wing, everyone won't be getting the DGCI audit, but yes, people face issues where ASMT 10 has come up. There is a regular GST audit post that which starts. So one has already submitted the information, then there is a resubmission of information required. But in parallel to that, when you get an anti-evasion wing notice, you get a DGCI notice, and they require some information from you. And as a taxpayer, I think that I have already submitted the bulk of information. How can I do that again? Because it actually involves a lot of cost and time involvement into it. So a person who is having affairs managed in a very fairly manner won't have any issue in submitting the information if it's not time consuming. But I think the taxpayers who are into complex business are only getting such kind of notices. So how this should be managed is, firstly we should see that the DGCI or anti-evasion wing and the GST authorities, everyone is a separate authority altogether. And they have a right in their jurisdiction to ask or request the information. Just keep ourselves into their shoes, that authority issues a notice and we say that we have already submitted this information with my state level jurisdiction, right? So how to handle them? So under the law, in my understanding, there is no provision whereby we can try to limit them, else this issue would have never cropped up. In my view, just a humble request should be made, can you get this complete information which I have submitted with my jurisdiction officer be obtained from them? The answer usually would be no, because even they have their confidentiality levels maintained. Saying a no to them should not be done. If the stakes are really very high, very high, and we see that the intent of these authorities is beyond making a regular investigation, then filing a writ in the High Court is the only available option. I see that. If the stakes are not high, if you think that our business is a very fairly managed, and I have all the information lying with me, which I have already submitted to one authority, I do not see any problem in submitting this information again by putting in some time with the authority who has issued the notice. Because getting into loggerhead with the authority at the notice stage itself, right, it's going to spoil the whole sport.
Agreed. So obviously, one is that you go start fighting with the authorities. 2 is that you comply with it. But there are other nuances with respect to this. Say for instance, I was issued an ASMT 10 and an ASMT 11 was issued where my submission was accepted, though it would not have, I have at least not seen any ASMT 11 being issued. And then DGGI also wants to come in obviously with some additional information which they may have figured out during the investigation. From a larger policy perspective, with respect to consistency in education, reduction in compliance, the idea of GST was very different when we invested crores and crores of rupees in technology to move to GST. So from a larger policy perspective, Saket, Lalten or Harun sir, anything you think that this is something which government needs to pay attention on? That was not the way we intended that the administration of GST would happen, and whether technology can be used in a better manner to address whatever concerns government may have with respect to any transaction.
So maybe if I can take this up. One is certainly the reason why we have too many officers. In fact, what it beats logic. Why should you have for one tax? And now since we have only one nation, one tax, so many officers having concurrent jurisdiction over it. It's only because maybe the government also does not trust the officers, either their competency or otherwise. And hence they have, had parallel officers so that if it gets missed by one, there is another one. If it gets missed by another one, it's the third one. Second, obviously because there is a merger of two taxes, there are state and central level officers now. They both are, looking at the same transaction the same manner. Earlier it was VAT and excise while it was relating to goods, but their scheme was different. So that's why we have so many officers. Now, having said this, I think there is a provision which says that if a central government officer, if the central government has seized jurisdiction over a particular issue, then the state or vice versa cannot take the jurisdiction. So therefore, there is some mechanism in law which prevents, if already something is taken up by one kind of officer, because central and state both administer the same transaction, then the other one cannot do. So there is always already a provision. However, having said this, when you see practically in a, while for example, you gave example of audit. Now in an audit scenario, okay fine, this finding has come and ASMT 10 is issued and you know what the issue is. But the moment investigation starts, the officers are not supposed to, or they do not in any situation divulge what they are investigating, right? So they'll ask for information, they'll ask for documents, etc. Now since they have not informed that what they are investigating, how would you actually prevent them by resorting to this provision that look, you are doing the same thing? Only if once they conclude, then only you can say, once the entire thing is over of investigation or this thing, then only you can go back and say, look, you have already, this is already ASMT 10 issued. Then probably he may not undertake work. So therefore, what can be done here is, we can just upfront inform the officers, like this is ASMT 10 is already issued if you are looking at this transaction, and probably they'll seize off the matter and then they'll, they'll not proceed ahead. If they want to proceed it, then I don't think currently there is any choice. Only option probably could be if it, escalates to a very high level, you may, and the stakes are high, you may go and writ.
Right.
There's one more point that needs to be noted. Now, the CGST Act and the GST law, the provision only says that if the central tax authorities are seized with a particular subject matter, then state tax authorities cannot take upon that matter, investigate that matter. Now, Alok, in your points, you pointed out that even the central tax authorities have different wings. There is one investigative wing and there is one executive wing. Now, executive wing and then there is audit wing. The audit authorities have probably already issued an audit notice on a particular subject matter. The issue arises, can you stop another wing of that particular tax authority only from basically proceeding ahead with the same subject matter, as you pointed out. Now, interestingly, there was recently one interesting judgment on this very issue. And what the High Court held was that at the end of the day, even if the provisions of CPC are not basically borrowed as it is in all of these GST laws and all of these specialized fiscal laws, but at the end of the day, one very essential principle of CPC is that adjudication, the controversies, the disputes, the litigations ought to be minimized. So if a particular dispute has, even if there is absence of a specific provision, I think we can still continue to rely upon the general principle which is there in the CPC to argue that if a particular subject matter has already been taken up by the audit authorities, then investigative wing ought not to take up that subject matter all over again. And the court allowed the relief in that particular case.
Correct. And in fact, the recent trend is that the audit takes up an issue, tries to get the money deposited. If they think that the company is not willing to deposit the money during audit, then they send DGGI. So now you will have to deposit. So DGGI has become a tool to, get the money deposited even when there is a reasonable scope of interpretation involved, and we'll discuss that in detail when we come to search and seizure and how to handle these requests. But before that, we'll move on from this. Harun sir, anything else you would want to add on this on policy level?
No, just I think a brief comment I would have here. I think, so if you look at it, the revenue authorities already have huge information with them. There's a very detailed GST annual return. They call for all kinds of information during the audits. They call for income tax returns, tax audit reports, transfer pricing reports. There's already so much information. I mean, even if they insist on getting location-wise trial balances, I'm not even too sure. I mean, it will involve obviously a lot of time getting wasted at all ends with people trying to reconcile what's appearing here versus there. I'm not sure ultimately what is going to really, what will be the benefit to the tax authorities.
So on that, sir, I had an opportunity to discuss this with someone in the government, and the idea that was suggested was that it's been 5 years, but nobody has now gone into the consumption principle of GST. That where the consumption is happening and therefore which state should have received. Once you start preparing the local state-wise trials and making it a profit center, you will therefore correctly account for the expenses pertaining to that location where you may not have paid the tax because the procurement may be happening at a head office level. So in fact, the trial balance would lead to various other challenges where states may have infighting as to which state needs to get this tax. So moving on, the third topic today we have is with respect to secondment arrangements. And obviously I am sure all of you would be aware that recently Supreme Court gave a judgment in Northern Operating, though in the context of service tax laws, where interpreting the secondment agreement which was involved in the case, the court concluded that the employees that were seconded in India were actually employees of the foreign company and were rendering services on behalf of foreign company to the Indian company, or were providing manpower services, and therefore the Indian company had the responsibility to pay service tax under reverse charge mechanism. Now obviously this judgment was given in a particular context in respect of an international transaction. The important question that arises is what would be the impact of this ruling, number one, on the overall secondment arrangement, number two, would it have any spillover on the GST. So to start with Alok, if you would want to just briefly summarize what this judgment says and what is the impact of this judgment.
So the issue of secondment is not new for we taxpayers. It's something which was already an issue under the income tax law. We have been struggling with the permanent establishment being created out of secondment. We have judgments, ITAT, High Court, Supreme Court, everyone has commented onto it. Now again, so this issue was a kind of settlement, I should say that. The tax authorities always had something to, allege in the assessment order. And the taxpayers had also kind of settled on this issue, that how to manage this secondment issue if in case it comes up. But now there is a judgment of Supreme Court which is coming out on secondment and which is coming in the indirect tax space. So just speaking very briefly onto this judgment, it's something like the foreign company has sent its employee to India. The employee is being alleged to be an employee of the foreign company and not the Indian company. The salaries of this employee are being paid outside India. In such situations, it is said that the foreign company is engaged in the manpower supply services, and hence there is a levy of service tax onto it. Now this, we are into the GST regimes, GST era now, but again it's an indirect tax. We still have the manpower supply services under GST as well. So naturally there is the biggest worry, apart from people who are having cases stuck up under the service tax law, the biggest worry is on the GST front. Then what's going to happen? Will there be a levy of GST on this part or not? So yes, there will be levy of GST if we strictly read the judgment that foreign company is supplying manpower to an Indian company. Now the question comes up, is the foreign company engaged into the business of manpower supply? is just to give you ABC Limited, which happens to be one of the largest, you see,
Say automotive.
automobile company. Is it engaged in the service of manpower supply? Answer is no. So ideally, Supreme Court itself should, under the review petition, not aware at which stage it is struck up now, should review it, or probably government should look into it, what is the real intent for the foreign company to supply a person, or to depute, I won't use the word supplier, to depute a manpower from them or second it to the Indian arm. The implications of it is not just limited to GST. Under GST, it's very simple. I'll make a payment of GST under RCM and take a credit off it. The story is closed. But the larger implications from there reaches to the revenue of the foreign company, which will be taxed in India as a permanent establishment. Because as and when the Indian company makes a payment of GST, it accepts that there is a manpower supply. And when there is a manpower supply means the AFCO is deputing its person in India with its Indian group concern to render some services, and that attracts a permanent establishment. So the judgment of Supreme Court is not something which is in isolation. This judgment actually relates to the judgment earlier as well, whereby Supreme Court had commented that there has to be a lien on employment. That is, the secondee should be in a position to again go back and join its original employment with the foreign company. If that remain under the income tax law, that remains under the service tax judgment. So essentially, intention of Supreme Court is very consistent. Whenever there is a secondee who is coming to India, that person has a right to again go back and join the employment. They are going to view it as the employee of the foreign company, and then there is a levy of GST, and when there is a levy of GST, there is a permanent establishment clearly created in India, out of which the foreign company has to make payment of some taxes in India. So it has wider ramifications than indirect taxes also.
Correct. So, no, I completely appreciate, and obviously, yes, High Court, Supreme Court in this specific facts of the case said that the employee was bound by the policies of the foreign company, there was a lien on the employment, etc. But Lalitenj ji, does this mean that in all cases of secondment, the Supreme Court ruling would hold that there is a liability to pay GST or service tax, or there is some nuance that we need to understand around it?
Yes, so that's a very interesting point. Now, when we read this entire judgment, we give this judgment a very thorough read, 2-3 times, I think. Only after that we realize that this judgment basically does not. It provides for a lot of tests. First of all, there are 7-8 tests that have been talked about: control test, 3-tier test, salary dispersal test, integration test, and economic reality test, and all of these tests have been talked about. Now, this judgment, to put it succinctly, in my opinion, this judgment does not basically say that in all cases, if the services of an employee have been loaned to the Indian entity, that means that where after the period of secondment ends, where the employee goes back to the foreign entity, goes back to the original employer, it is not necessary that in all those cases the Supreme Court judgment of Northern Operating System will become applicable. We still need to see a lot more nuances. For example, one very interesting point that this basically entire judgment talks about is that first of all of these agreements, these agreements were very beautifully drafted. The agreement of secondment, if you see, it very clearly says that the risk and reward associated with that employee will also reside with the Northern Operating Systems and not NTMS, which is the Northern Trust Management Services. And the salaries, even though they were being disbursed by the NTMS, but at the end of the day, they were being disbursed on cost-to-cost basis. And they were, the NSO was basically reimbursing the entire cost, and NTMS was charging a 1% administrative fee, which indicates that it was rendering payroll services sort of activity. So at the end of the day, there were a lot of factors which were there in support of the taxpayer also. But then what the Supreme Court has said is that they have sort of tried to apply a doctrine wherein they treat an associated enterprises, a group of associated enterprise probably as a single person. Now at the end of the day, what they say is that there is one entity, there is your parent entity asks you to provide certain set of services. Then by asking you to provide those services, they end up creating a requirement for having a specialized staff also. And then in order to fulfill that necessity also, they provide you with the necessary staff. And even so, if we see the agreement in that particular judgment, it says that the profits of the company of the Northern Operating Systems were restricted to 15% and not more than that. So at the end of the day, what they say is that you are not the Northern Operating Systems, that is the Indian entity, is not able to derive the necessary profits from its own set of employees. Now, now even as per today's economics, all of the transactions are priced on the basis of cost plus profit method, but over there they came heavily down upon the fact that it was one single group of entities that were being engaged, and the Indian entity was merely providing services to a associated enterprise. So when we talk about a normal case scenario that we ordinarily see in case of in a lot of companies, is that we'll have an Indian subsidiary of suppose an automotive giant, Japanese giant, and that particular Indian entity would have seconded employees of the parent entities. Now in all of these scenarios, the Indian entity is able to derive the profit out of the employees that have been seconded. It is the Indian entity which basically decides the pricing of its products and sells it to the customers that it decides. Correct. To a certain extent, I feel that the Supreme Court has not brushed aside the control test which was being applied earlier. It still continues to be relevant. And we will definitely have to carry out a very thorough exercise, because it's a 3-judge bench judgment. Of course, the department will continue to rely upon it for the purposes of all the engagements under the GST regime. But at the end of the day, I feel that the control test still remains to be a very active principle, and we'll have to see all of the tests that have been opined in the judgment in conglomeration only. That is the effect.
I completely agree. I think the fact that the Indian company was required to provide certain set of services to the parent company, for providing that certain set of services, certain technical employees were sent to India on secondment basis, and the service fee was charged on the cost of those employees plus a 15% markup, weighed heavily in the mind of Supreme Court in the facts of this particular case to decide that this secondment arrangement was actually a service arrangement and therefore should be chargeable to service tax. Coming back to you, Saket, obviously one is how do we deal with this problem now under the GST laws, because as soon as this judgment came, we have seen practically various MNCs have initially they were received DGGI summons, and then I think some intervention happened at embassy level. After that, they have started receiving soft letters reminding the companies with respect to their liabilities to pay GST on the secondment arrangements. The fact that, as Lalitan said, that this judgment is a judgment on very peculiar facts. How do we deal with this issue of now GST authorities asking to pay GST on the reverse charge with respect to these? And assuming that this GST is paid on the reverse charge, whether we can take credit of such tax which belong to last 5 years or not, that is one question. And then I'll come to the the service tax related issues also maybe later. Yeah.
See, one is, as Lalitrendra also mentioned, there are various peculiar facts and circumstances you were also mentioning. One of the examples could be in a case where it's not a service entity. There is no cost recharges or cost plus entities happening. There are a lot of MNCs who have actually operations in the country.
Correct.
Okay. So, for example, a telecom company or automotive company, and there even CEOs, CFOs, CTOs, even the senior management are basically on deputation or on secondment into India. Now, whether those transactions where there is no service that I am rendering, but these are actually, the decision makers or, who are taking the decision for the country, for their employer, which is the Indian entity, whether this would also be brushed aside. Probably the tax office will certainly take this view on this issue, but however, we can distinguish it, and it's only since it's a 3-judge decision, maybe at a later point in time we'll only get to know. Having said this, what do we do now? Now, insofar as GST is concerned, obviously there is a Supreme Court judgment and there is short litigation that is going to come on this issue. One option is you want to buy peace and you don't want unnecessary litigation, probably pay the tax and claim credit of it. Most of the taxpayers would be eligible to take credit. However, having said this, you could write a protest letter stating while we don't agree with this position, however, having, it's a revenue neutral situation for us, while we don't agree with this position, we are paying the tax so that we don't want unnecessary litigation, you take credit of it. Maybe it will be for a lot of SSCs where there is no credit accumulation, it will be a good ploy so that they at least don't have unnecessary litigation, tax, interest and penalty staring at them at 5-7 years down the line. Wherever it is not possible, then certainly you will have to take a position, maybe fight the legal battle insofar as GST is concerned.
Correct. Mr. Qureshi, while obviously these international transaction, obviously Supreme Court has the judgment. How does this impact the domestic companies having secondment inter se between the domestic companies? Should they be also wary of these transactions being treated as services going forward, or you believe that that is something which is not within the scope of what Supreme Court analyzed?
I think there is a clear provision for manpower supply. Correct. Under both the earlier service tax as well as the current GST.
Correct.
So I think whether a secondment is manpower supply, I think if you look at most agreements, it actually comes out that way. I mean, you can draft the agreement in a particular way, but I guess as Alok said earlier, you'll have to see the business reality should not contradict what the agreement says. So if the agreement indeed is in the nature of manpower supply, then I guess whether it is domestic or international, I think then we'll have to look at the provision very closely. Just one comment I wanted to make. I think the technical aspects have been debated threadbare, and I think the practical implication of this, which is now emerging, is that because this is a Supreme Court judgment, it is not a change of law. It is really retrospective. They have interpreted the existing law, and actually in certain cities, I think Sandeep, you also alluded to that, there are notices being issued asking for details of transactions in the last several years. So they may not have come to issuing show cause notices right now. Maybe that's the soft letters that you're talking about, but they are definitely asking for details of transactions of secondment agreements in terms of the Supreme Court judgment.
Correct. And as you rightly said, sir, they are right now asking the companies to voluntarily comply with the judgment and submit the data with respect to 2017 onwards. And that brings to my next question.
Let me add one thing with respect to this issue. Some very interesting provisions that exist under the GST regime are come from Schedule 1. Now, the problem is that when this judgment came out, everybody started referring to Columbia Asia. Yeah. Now, in respect of services, under Schedule 1 only, there is paragraph 4 which reads that import of services by a person from a related person or from any other establishment outside India in the course or furtherance of business is deemed to be a transaction of supply which is taxable under the GST. And this would have ramifications under the domestic secondment agreements also, because similar kind of provision is there under paragraph 2 also. So at the end of the day, I personally feel that under the GST regime, we have a rather difficult steps that we need to tread on, and this is one of the structural issues that I have with the GST. Now, under the excise and customs duty, it was very easy to monitor incoming and outgoing of goods. But with respect to service, what should be the criteria? Should it be the criteria of direct beneficiary, indirect beneficiary, today the department is trying to cover even indirect beneficiaries within the scope of beneficiaries, and saying that you ought to have received some kind of income or consideration from them, and that ought to have been made taxable. Now any activity that we carry out, for example, this session itself, anyone who is basically attending this session also ends up benefiting the companies that they are with, and that leads to an indirect benefit. So had we been related persons, would that transaction would have become taxable? A friendly advice given to a related person, would that also become taxable? The scope is very endless as far as the structure of Schedule 1 is concerned with respect to supply of services. That's one of the inherent issues that I feel is there with
on this, and I would like to say this is a very, very important legal issue, and in fact this is something which is being deliberated. Obviously the constitution gives power to the government to charge tax on income, on sale, on supply of service. But what is income? What is sale? What is supply of service is defined under the constitution to a very limited extent. In fact, income is not defined. Now by way of a deeming fiction, you stretch that concept of sale or supply or income to an extent where you want to tax something which in no commercial reality would qualify as an income or supply or sale, is something which is before, in fact that is listed for our arguments on 13th before Delhi High Court, where this whole idea of extending the scope beyond commercial realities by way of deeming fiction is to be challenged. And I think that's what you're trying to say, that these deeming fictions are so problematic that they are removed from the far realities of the world, commercial world. Well, thank you so much, because Mr. Qureshi has to leave us in next 5, 7, 10 minutes. I have a few important questions for him, and I think we'll want to have the advantage of him being here and sharing his experience with us. Sir, moving on to the issue with respect to appellate tribunal, and I think that this is something which is very, very critical issue, and everybody would have faced this issue. It's been 5 years, 5.5 years now, and we have received show cause notices, orders have been passed, first appeals have been decided, but there is no tribunal in existence or in near vicinity. It's not that it is going to come soon. It looks like the issue is stuck. So one is, I think our audience would like to know what is the problem that we do not have appellate tribunal right now, and how is it impacting the industry?
I think this is something very surprising actually. We came out with a landmark legislation. All political parties came together. A GST council was formed. This was really a landmark legislation. But somehow we forgot to address the issue of dispute resolution. The GST tribunal, appellate tribunal was supposed to replace the CSTATs, was supposed to be that mechanism. Unfortunately, I think it has got stuck in courts, and I think currently it is pending in Supreme Court on who all can be members of the tribunal. And I think there is a lot of back and forth happening between the government and the court on that. I understand, I think the government is giving a push once again, trying to form this. But as you rightly said, Sandeep, even if they now resolve all their differences, with all the tribunals they have to form on an all India basis and finding members for that, as it is, there's a problem with finding tribunal members. I think it is going to take maybe several years to actually come up with a functional tribunal system. So what does the industry do? I think litigation is just piling up. Till now, most of the litigation has been on ITC, for example. Of course, intermediary has been one of the big litigations. But I think the real litigation will start in 2023 when all these audits start culminating. There are multiple audits going on as we speak. Once those audits start culminating into actual audit reports, that is where the real litigation will start. Because this is all at a state level. You cannot be rushing to High Court for each and everything. So I think that is something, maybe, I think while constituting the tribunals is definitely going to take time. I'm sure the government has its own challenges with the Supreme Court and members and everything. But maybe one thing which should be done really is, I think CBIC should step in, try to issue clarifications wherever possible, and try to minimize the litigation which is going to arise because of these audits. I think, for example, that location-wise trial balance is one such thing. I think wherever they are seeing that states are taking different views and things will snowball, I think maybe it is for the GST Council, the CBIC to really step in and try to douse the fire and make sure it does not become a huge litigative issue.
Right, sir. So also, if you see the constitution of the tribunal under GST laws, we have now been used to tax tribunals which had independent judicial members. Would it be substantially different, or are the role of tax tribunal the way it is contemplated under the CST law, being formed by 3 of the revenue officials? Would you believe that the outcome or the effect of the tribunal would be much limited as it is in in case of service tax or income tax laws?
Yeah, definitely. I think there will be a big dilution. I think the concept of tribunals, it is supposed to be an independent body. The way for example, the income tax tribunals are, these are supposed to be independent bodies because, see, the first level appeal is already part of the government. You can't also have a second level appeal, which really is just mirroring what the government is saying. So these have to be independent bodies. And that is, I think, one of the challenges, because the Supreme Court has a certain viewpoint on who all should be members of the tribunal. Now, to firstly agree on who can be members, secondly to identify so many independent judges, which anyway many tribunals, including the income tax tribunal, we are already facing that shortage. And the C-stats, for example, C-stats are virtually non-functional now because most members have retired. So I think that is definitely going to be a challenge. I think we will see more and more pressure coming on high courts. High courts are already clogged with all kinds of litigation. I think the GST in the last 5 years has just multiplied that. High courts anyway do not have the time to really look into factual issues, which is what most GST issues are. I think either they get into those issues. For example, intermediary, thankfully they are trying to get into the issue. But I think it is definitely a challenge for smaller taxpayers to approach high court for each and everything.
Correct, sir. So on the option, yes, we understand the high court is option. Is it a practical option that in the interim, the existing C-stats may be given the jurisdiction to decide at least some of the issues? Do you think that it would be a practical option which the government should consider?
Yeah, definitely. I think that is a very good suggestion. I think they have the knowledge, the expertise to look at indirect tax issues. But I think, as I said, there is a pressure on, even there we don't find too many members. For example, we know the Chandigarh tribunal has been non-existent for several years.
Right.
So I think, and maybe to your point, Sandeep, maybe it is easier to fill up those tribunals,
right,
than to set up GST appellate tribunals. They will anyway take 2-3 years. Maybe it is easier
existing
to find
infrastructure,
a few members and try to fill up these C-stats and at least try to push some of the high visibility issues there.
Correct, sir. Thank you, sir. Thank you so much. We understand, sir, that you have prior commitment and you will have to leave us, sir. Thank you for your time, Ashish.
No, please carry on.
We'll just leave you.
So moving on, I think to our last topic and topic I think which.
Sorry, I wanted to point out one thing on the concept of GST appellate tribunals.
Yes, please,
One
please,
very
please.
good recommendation that came from you was using the existing set of tribunals. Now, this is not something which, this is not a situation which is without precedent. Interestingly, there is another act in respect of which the tribunals had to be formed, and there was a lot of delay by the government in establishing the tribunal. And I think not many years, almost a decade had passed. And what the Supreme Court finally said that in all these cases, they said that at the end of the day, since you have not basically established the tribunal, will make the High Court the appellate body. So you can start preferring your appeals before the High Court itself. Now, this is also, since we have some kind of precedent on this ground, I think governments can certainly refer to it and continue to use the existing set of mechanisms, whether it is SISTAT or High Courts, and convert them into appellate forums directly from the appellate authority.
True. See, I have always believed that C-states are going to continue for some time, at least 5, 7, 10 years by the time. So you have to maintain that infrastructure there, those buildings would be there, the court would be used. Now to set up fresh infrastructure is a waste of effort and taxpayers' money. It is rather, you use that same infrastructure, change the name to tax tribunal and change the name of C-state to tax tribunal. In all the acts, it doesn't matter really. So I think that is something which should be considered. I am hoping that it is considered at appropriate levels, but I think it is the easiest way out as of
The
now.
only issue is, if you know, there is a state element also. The state is a central government.
Yes.
States probably would not agree to this kind of a proposition, or they would say, why don't you consider VAT tribunals that we have as a CSTAT or as whatever GST appellate tribunal. So I don't know, because of the federal structure, to what extent we'll be able to actually implement it.
No, I think that also, I think the solution is that all the VAT tribunal members, all the C-state members and a presiding judicial member could have formed a 3-member tax tribunal in GST. But the point is that till the time they decide to amend the provisions, it remains a challenge, because today it has to be GST officials only.
Sorry, Sandeep, just one point on the last issue on the secondment.
Sure.
Maybe, before we go to the next
Sure.
topic, had few thoughts in terms of what do we do now?
Right.
Because in the early, especially for the service tax law, now there are various options that people may be thinking about, that if you have to pay for the past period for the Supreme Court judgment that came in Northern Operating, relying on that, and everyone pays tax, and what happens to that tax? One option was that can come to mind is, whether can I transition this credit given this 2 months window that is got opened. To my mind, that is not a feasible option, because it is not covered, because the transition provision under section 140 does not provide any such option to to allow this sort of a credit, tax which you are paying now. None of the provisions cover that. And any which ways, even if you do it, it has to go, this is the full court judgment of Supreme Court, it will have to go to assessment, and the tax office will not allow it, any which ways. That's more or less certain. Second option, which probably is a much better option that probably can be thought of, is, while it's not completely applicable, but if you see section 142 subsection 6A, it talks about if during any litigation, okay, if there is a Senate credit that is admissible to you, for the earlier regime, then you can claim a refund of it. Okay, now that is for pursuant to an appeal, revision and review. Appeal, reference and review is what it says. I don't know what review means. Reference may be High Court reference, in which was there in the earlier regime, but it says so. So that is, as I said, not directly applicable, but that is the only option or the best alternative to my mind that we can do. A better alternative still would be, and that can be done, is policy advocacy around this, especially for the service tax period. Now in the policy advocacy, it can be argued, while if you go down this route of 142 6A, if you go down that route, obviously you'll have litigation, and litigation will go to the Supreme Court, and then only you will come to know whether it's applied or not. Policy advocacy, we can represent to the CBIC and this GST authorities, or maybe to CBIC, because it is a service tax matter, stating, look, I was anyway allowed, I should have principally, on principle, I should have been allowed refund of it, any which way I would have used this as a credit. 140, that section already provides me, gives an option, if the credit is available, then you will get refund. It's not a fraud suppression case, Supreme Court decided it, there were a lot of decisions in favor. Why don't we, close the past litigation? And a very clear case in point, if you saw the last GST Council meeting, wherein in case of Ice Cream Parlour Association, which I was representing to the CBIC and to the GST Council, for the Ice Cream Parlour Association, they have indeed done the same thing in the GST regime, where for the past period, it was, in the last year, they mentioned that, the rate of tax would be 18%, but however, the entire industry, almost every player was paying tax at 5%, so there was a liability of 13%. They have retrospectively said, while the tax was always at 18%, but since you did not take the credit, it's almost the same. We are willing to give up our right to litigate, and therefore they are not litigating those cases. So this can be a very good case in point, and this similar thing can be done as a policy advocacy, stating that, look, I would have paid tax and I would have got refund. There is you yourself were giving refund. Otherwise, if it was not GST, I would have allowed to take credit. So by the same principle, please allow this us, and so that our CBIC can issue an instruction or a circular that will not litigate those cases and let it be closed.
True.
That was my thoughts on.
A very good thought. In fact, I think Saket, this is something which industry should explore for sure, and that's the, I think, easiest way out. Anything else involves 20 years of litigation going forward. Well, thank you, and we'll move to our last topic for today, which is search and seizure. And I'm sure all of you at some point in time may have faced the visits from GST authorities which are in the nature of search and seizure or inspection, and would want to understand, what are the rights and remedies that a taxpayer has in case of proceedings like these. To Saket, to start with you only, is it okay for the tax authorities to just do search and seizure in anything, or are there some circumstances under which that the tax authorities only have the power to do this? And if so, are there any safeguards that are available with the taxpayer in case of a proceedings which are in the nature of search and seizure?
Yeah. So, Sandeep, and search and seizure, the principle or the reason why search happens is because it happens in investigation because they are looking for evidences. Now, what can you search? You can search premises, etc. Where and when do you search? When you have a reason to believe that there is some either goods liable for confiscation or there are some material which is necessary for investigation as an evidence. Now, typically there are various methods available with the government, with the tax authorities to garner evidence. One of the simplest is they ask you for information, your agreements, etc., and you have to provide it. When do they resort to search? They resort to search where they feel there is evasion of tax, and if they don't come suddenly, because search they don't announce that I am coming for search, they don't come suddenly, you may destroy those evidences. So in that sense, search, in my experience also, both industry as well as consulting and litigation, search doesn't happen very frequently, okay? But if it all happens, then it's basically they should have a reason to believe. Now, question is whether they are supposed to inform you the reason to believe, or as a taxpayer, can I ask them what is your reason to believe, whether the reason to believe is accurate or not? Answer is no. They are again not obliged to inform what is the reason to believe. They can keep this confidential why they are searching, okay? So they can keep it confidential. So answer is no, you cannot do it. Only situation where this can be questioned, this reason to believe, is when it goes, again, the water goes above the roof, or it is into a very, it's escalated overboard, they become very overboard, then you can file a writ. Then the High Court may ask the officers what is your reason to believe, so as to ensure whether this search is conducted as a harassing mechanism, or genuinely there was some insights that they had for of any evasion. So therefore, search, it doesn't happen too frequently, but if it happens, typically as a taxpayer, you don't have much right to oppose that search. Having said this, CBIC recently in a circular also have mentioned that during search you should not resort to, search should be not
it should not be resorted very frequently. It should be done more of a, as in whenever you feel there is a clandestine kind of an activity or there is a evasion of tax. So therefore that's the broad contours of search as a right. And then the second aspect you mentioned about seizure. Now seizure, again, if the goods are liable to confiscation and the goods are or the documents, etc., they can seize those things. Typically whenever they seize, especially the evidences or the documents, whenever they seize, they don't provide you the copies of it. Only when a show cause notice is issued, they provide a copies. However, if you can request that for your normal operations you need it, they may oblige. So it's more of, typically in search proceedings, initially the officers are very, very, aggressive. Over a period of time, they also mellow down, and typically they oblige for these practical challenges. So that's broadly on, search and seizure.
Thank you so much, Saket. I think from what you were saying with respect to reason to believe, a thought came to my mind. See, under income tax laws, at least in the erstwhile scheme with respect to reassessment, where the reason to believe were required to be in writing, and there was a judgment of Supreme Court in GVK drive shaft which said that reason to believe should be supplied to the SSE, and I think that became the norm in the 148 regime. Is it possible under the GST regime to explore an argument like that, where after a search is complete, the SSE has the right to request for reason to believe in writing, and therefore be able to challenge the very premise of the search at all, and whether something similar has happened at all or not? Any thoughts on that, if you have?
See, the reason to believe, okay, once the search is completed, typically no SSE would want to get into a litigation. Once the search is completed, at the max they may come out with a show cause notice, and I have practically seen a lot of search or investigation happening which does not culminate into even a show cause notice, because they didn't find anything.
Correct.
But post that, no one would want to, because businesses are interested in doing their businesses.
Right.
They are not too keen in pursuing this litigation. Probably that's why there is no such litigation has come, at least to my knowledge, into indirect taxes, where reason to believe has been challenged. Only places where it has been challenged is where the investigation they've gone overboard, and therefore to stop the investigation they have challenged before the High Court.
Sure. So Lalit, over to you. Number one, with respect to this reason to believe, and then number two also, as Saket was saying, with respect to seizure of documents and then seizure of goods, what happens when the authorities decide, and these days I'll tell you, see, what happens is my client will call me at 9 o'clock in the night, he say that he's saying deposit 50 lakh, my otherwise warehouse is being seized, and tell me quickly what should I do. And as a lawyer I can tell him, okay, let him confiscate, we'll go to court, we'll challenge it, but no business wants their stocks to be confiscated because the business stops tomorrow morning. So how do we deal with that situation also, if you can take that up?
So coming to the first point, interestingly, we do have, I was not aware of the income tax jurisprudence, but there is a lot of development that is going on, especially in US, because of the 4th Amendment. Now, 4th Amendment in the US Constitution allows every person to secure their premises from a warrantless or a search without any basis. But particularly when we talk about the Indian scenario, especially when we talk about the Indian Constitution, we don't have anything like 4th Amendment in the Indian Constitution. Even the right to privacy emanates from Article 21. Now, one debate that emanates is that whether companies can enjoy fundamental rights, but that I think is certainly can be settled in the favor of the taxpayer, because when we talk about Article 19, it talks about citizens. Companies cannot qualify as citizens of India, but Article 21 covers persons. So we can still have something like right to privacy, which can come in, which can be argued in all of these matters, that the reason to believe, first of all, should be declared to us before conducting the search, and also it should be based on the records which are prior to the search, and not on the basis of documents which are discovered during the course of search.
Yeah, I completely agree. It cannot be a witch hunt that we'll go, we'll see, we'll find something for sure, and then we'll draft our reason to believe. And therefore, in fact, why I asked is that in one of our challenges to the search proceedings, we tried to build this jurisprudence of income tax into GST, which courts have not taken a view on. But I think that this would be interesting to see if we can push the court to say that the reason to believe in writing shall be provided either at the time of sharing the search warrant. You can come to my premises, you can have that surprise element, but give me the reason to believe. Tell me that you have come to look for fake invoices, and then don't go into secondment issues and intermediary issues and nonsense issues. Look for whatever you have come for. But we will see how this develops. Alok, any thought on this, on how, from our industry perspective, if, what are good to do's and don'ts with respect to search, whether, any decorum or anything which you would want to advise people with respect to.
So Sandeep, do's is something to have a lawyer friend like you, right? Honestly, from industry perspective, that is the best to have a good legal team with you. Okay, coming on a serious note regarding search, if a search happens on a premise, search is something which I don't think anyone in industry would like to ever have. Honestly, I'm very lucky not to have any such kind of experience till date. But I'm always worried, my worries start from the month of January, because of the income tax people start entering premises to check. It's not a search, it's more of a TDS service. When you come into the GST searches. So whenever any search happens, the do's it's not something that when the search happens, we should have certain do's and don'ts for that. I think when the businesses are very fairly managed, okay, in GST we are filing our GST returns. The GST returns for a multinational company are usually backed up by all the data. So we should be confident on our complete data or on the operations which are managed in a very fair and a legal manner. What I mentioned about the contract should be a replica of what in reality we are doing. If the house is in order and we are not aware for what reason the GST authorities have entered our premises, there is nothing to honestly worry about it. Of course, it's going to be an issue for a few days of time where we would be held up inside the offices, or probably a lot of more activity would be done with the board of directors. The globals are going to be very much worried, although they won't be sacking the leader immediately, but even the job would be at risk at that day. But I don't think one should be much worried about it.
I think that's
and
Sandeep,
I would like to add on the reasons to believe aspect. The reasons to believe should be there. Why income tax is a law? Okay, GST is a law which is on transactions basically. Why for one law there is a reason to believe story? Why for another law the reason to believe story is not there? Do they believe that at one level, when you start the transaction, that time everyone is a thief? I won't tell you for what purpose I am here. But when I enter above that line, then you are a very fairly running businessman. And that's the reason I'll provide you, sir. I come to ask for this data information. I think for these reasons I am here. So reason to believe should be there. Coming to another aspect, that there should be some deterring factor. That even if the reasons to believe are not provided today, but if they are provided after closure of the search. So Saket, I will defer a bit onto it. You have come to spoil my peace of mind. Now I will not leave you. There should be deterring factor also for the revenue authorities. Of course, not all the revenue authorities are of that nature, but this factor, if it's built into the law, they will be afraid that I just can't go inside and open up their cases and try to find out something even which they are unaware of. Okay, some ignorant transactions would have been undertaken, and then I'll build up a case of prosecution against them. So even the revenue authorities would be under some control.
So interestingly, you will not see section 148 have existed in the income tax act since 1961. Late in 1990s, GVK drive shaft came in which said that what is this? You have to give reason to believe copy. It has to be in writing. You must have recorded those reasons to believe. No, they must not be in your mind. It must be on the file. So you give a copy to everything. So I think, and from 1990 till 2021 when they amended the law, it is for the first time when they inserted section 148 capital A, where they actually brought in a provision in law saying that you have to give a copy of reason to believe. And for those 30 years it went on because of that Supreme Court judgment, and if you read the judgment, it's a 2-paragraph judgment, just 2-paragraph judgment. So I think more consultants, more lawyers need to push this before the courts to see that once a search is conducted, agreed, even at the end of the search in the evening when you are drawing a panchanama, give me that reason to believe in writing which made you bring here. You cannot just walk in, and I think all the international jurisprudence that we can rely on is going to be helpful on that. So thank you for that. Saket, coming back to you, anything, are you as positive as Alok? Nothing to worry about if they come? I have seen examples where they have been really rude, really, manhandling, almost manhandling people. In fact, my recent experience is that they now do not have fear of lawyers also, which is not a good thing for our profession, but yeah. So, any thoughts on that?
See, fortunately or unfortunately, I'll touch upon search. You are right. Search is, but search happens at my premises, okay, at the SSC's premises, okay. So in that sense, at least there is some event of control because there are a lot of people around, my own people around in the organization. So and they are a little better behaved probably in search proceeding. The more draconian I see, Sandeep, is summon proceedings. Because in summon proceedings, they call to your office, okay, their office, and then they, and there you are in their den, okay, in a summon proceeding. That is probably to my mind more draconian summon proceedings. So in fact, I would like to touch upon summons whenever there is a summon. The first thing is that when you see a summon itself says if you do not comply by it, you will be penalized under section 193 and 228 of the Indian Penal Code, which means it's a criminal proceedings, which itself makes a lot of people who have not seen the summon document, and especially if your CEO, CFOs are from abroad, okay, they are deputed or they are on secondment, then if you see this summon, they are they'll probably call the embassy. So first is this, but which is their standard line. Now, like you said, all those kind of mere manhandling, etc., that happens in these kind of proceedings, and I myself have faced several DRI and DGGI investigations to have seen this closely, how they play. Typically, they are very aggressive in the beginning. They'll probably take your take your mobile phone in the first place. You will not be allowed your mobile phone access, and they'll probably make you sit for a long period of time, and without doing anything, and then they'll call you maybe in the evening, and then they'll start the discussion, and then record your statement. And your statement, there is a all your details would be mentioned. That itself is very intimidating. So whenever you want to maybe some do's and don'ts in case of summon proceedings, which I have practically handled. I hope it's not recorded, but what I've practically done is, one, never carry your laptop. As I think Alok, you were mentioning earlier, they can seize the laptop, they can extract information, etc. So first is, don't take your laptops when you are going for a summon proceedings. Be prepared how it's going to happen. They are going to do almost every trick of any investigation that you would have seen in the movies. Movies probably they exaggerate a lot. These are more revenue officers, not police officers, etc. So they are not that bad as we see in movies and all, but yes, there will be some level of intimidation that would happen. Typically, I have seen in my practical experience, see, these officers also look at customs cases where there are smuggling cases where they have to deal with criminals. So these are same set of officers, so they have a bit of aggressive demeanor to handle. But I have seen practically with corporates and with people whom professionals, they are not bad. They are, while they'll try and intimidate in all possible fashion, I have not seen even one cases that they have manhandled. Yes, they have done tricks like maybe some of their companies, they would probably slap him to show that we can manhandle you, more to put pressure on people. That's the kind of thing that they do. But typically, I have not seen any cases. Several of them that I have faced, I have seen my clients also look at it, where they have been very aggressive in that sense of me. Yes, they are aggressive. They may be rude. They are rude several times, but over a period of time I have seen, initially they may be very rude, over a period of time they get softened a bit when they realize that yes, it may be more of an interpretation issue, there is no evasion, or a sort of you may just make better relationship with them more while both of us are doing our own jobs, but not we can have much better transaction or discussions that may happen. So that I have seen in almost all cases. I've practically seen these cases that they have become softer, and then it becomes more of like we have in audits where they ask for information and give those information. Those are the things. Having said this, for this CBIC, because this was becoming a menace. Why summon is also a menace is because that's the way they apply coercion on you to pay up the money. In search, it's done, they've come and they've gone. But if you have to, if they want you to pay the money of demand, etc., that is there, typically because the last step is you issue a show cause notice. You will not pay, you will litigate the matter, but they want recovery to be done. Because of course government works on cash basis, not mercantile basis. So for that, they would want to show collections. Now only the best way to do this is you summon a highest officer of the company, especially CEO, director, MD, and then obviously if MD is summoned, they'll obviously cough up the money and pay the money, and then they'll litigate for whatever it is, but then they'll pay up the money. That's the very standard protocol. But yes, it was becoming too frequent. Hence, in earlier regime also the CBIC had issued some instructions. In GST regime, maybe about few months ago, they've issued some instructions. Now those instructions allow you clearly mention that for standard documents like statutory documents, you should not summon people. You should not summon MD, CMDs unless and until there is a reason to believe, and you have already seen written approval from your boss that that person is involved in some kind of an evasion. And typically in an interpretation kind of a matter where it is more of positions, you should not summon. You can just request for the information. More of where there is an evasion, probably you summon, and there is a process in place of what are the summons being issued, that report they have to file. These are the few of the there are a whole list of instructions that CBIC issue. These are the primary ones where there are safeguards so as to prevent this kind of situation. In fact, for coercion also, for recovery of the money, there is another instruction issued where it is clearly stated during search or summon proceedings, the officers cannot do the recovery. Only if you are voluntarily to pay the amount, then only you pay the amount. While it's there on paper, but we'll have to see how practical it is.
So on the payment, I'm coming. I think the next question is on that only, and I'll take it with Litendra first. During this such proceeding, it is the common factor is that after the end of all the ordeal that has happened in the evening, he'll tell you that this is the amount that is to be deposited. It is to be deposited only by way of DRC3 challan. Deposit this, otherwise we are not leaving. So how do you handle this request of insistence on either reversal of ITC or depositing of tax on the day of search itself, when no adjudication has happened that you are liable to pay tax?
Yeah, Sandeep, so Saket mentioned a lot of do's and don'ts, but primarily I think in order to execute all of these do's and don'ts, आपको सबसे पहले अपने दिल पे हाथ रख के बोलना चाहिए all is well. Only then you will get the courage to face the tax officers and say कि okay, now the battle has started and I need to probably get into the mode of Bahubali and fight this battle through. Because so when these tax officers come, they usually put a lot of pressure. They'll show you, they'll be up with all their antics and try to pressurize you into coughing up some kind of money, reversing the credit, and coercing you into making some kind of payment. But as far as the law is concerned, the strict provisions of law is concerned, this is not the way they should be doing. At the end of the day, they can ask you to make the payment only and only if there is a proper order that is there against you. Any payment that we made pursuant to any such demands, we can first of all say no to it. Secondly, there have been instances when DRC 03 was filed and subsequently the taxpayer preferred a writ stating that whatever amount that we had paid was paid under coercion, and this fact has not been recorded. And of course, pursuant to this, CBIC also recently, as you said, it came up with a circular wherein they clearly mentioned that if the tax officer is coercing you into making a payment by way of DRC 03 challan, you can simply say no to it. But for all of that, you do need a lot of courage. Yeah, and we need to do that.
Correct.
Just to add a line, in fact, that's possible. That's easily possible in my whatever summons etc. that I have faced myself. In none of the cases I have paid even a penny, and it is all culminated into a show cause notice which we are litigating.
So undoubtedly it is about your ability to take pressure, how much pressure can you take, and if you can take pressure, the law does not give them any power to recover the money, and therefore they do not have any right to ask for it, provided there is something not completely illegal, number one, obviously, and you have the ability to absorb that pressure. I think the last question to end this session today, and I'll leave it for all three of you to take it. The other important challenge is that under the GST law, there is a provision that any tax that is deposited pursuant to an investigation, specifically under section 74, in terms of section 74, section 17(5) restricts the credit of this amount, whether this is a tax paid under RCM with respect to your import of services, or whether they allege that this item was not 18% but 28%, and therefore you have to pay additional tax. Now I think 17(5)(e) restricts this, I restricts this credit. So what is your position with respect to the amount that I pay on the day of investigation? If I voluntarily decide to pay any amount, whether it is a tax payable under reverse charge mechanism or tax payable because of valuation or tax rate issues, would it be available as ITC, and if my depositing it on the day of investigation, on the day of investigation, help my case of taking that ITC? Any one of you. Saket, you can start it.
Okay. See, 17(5), basically it was, I think, there in the service tax regime also, that the credit of, if a supplier pays tax, okay, under fraud, suppression, etc., 74, under section 74, which is for fraud, suppression, etc., the recipient cannot take credit of it. Okay. While this provision is there, see the situation. The recipient, there is no fraud. Assuming recipient, there is no fraud. But supplier probably paid a lower amount of tax, which the department in all cases, tax office in all cases will say it is 74. Even if it's a more cleaner cases also, maybe because of northern, for example, northern operating, if the department has to issue a show cause only, they issue in 74. So they'll always say 74. Now what do you do in such situation? Your 73 says, while as a recipient of credit, I don't have any mechanism in which I can challenge his 74, because it is the fraud or suppression, etc., happening at my supplier's end. Only safeguard that I have as a recipient of credit is probably what I can ask is whenever there is a supplementary invoice, because what will happen, the supplier would want to recover. That's how I get the additional amount of credit.
Correct.
So whenever these things happen, probably we should have our systems inbuilt. In those cases, you take an undertaking, indemnity from your supplier that you have not, in fact, in your POs or in agreement, built in a specific clause, in case you ask me a supplementary invoice, because most of its tax is added extra because it's available as credit. So you have those contracts mentioned specifically. In these cases, you should allow me that, if the credit is denied to me, you'll have to pay me back. That's one safeguard that you can put across as a as recipient of credit. Secondly, second safeguard could be, while supplier has paid tax under 74, where the limitation period is 5 years. When I'm taking the credit, okay, now that's a very subtle difference. If a show cause notice has to come to me for demanding the reversal of credit, in those cases, they cannot invoke a larger period, because there is no fraud suppression at my end, okay, and they cannot invoke a penalty also under 74. Then ideally speaking, they should go under 73 only. So no penalty. Interest, yes, there can be an exposure of interest. So that's about it insofar as credit is concerned. Now, in a search example that you gave, where DRC 03, in a search example, if you are challenging that amount, okay, if you are challenging that, it's you don't believe it, but you have to pay for whatever reason, then better DRC 03, because then you can again litigate, etc., because they wanted DRC 03. But whereas in a situation where you don't want to challenge and you want to pass on the credit and you believe it's 73, ideally speaking, avoid DRC 03 for a simple reason. If you pay under your 3B, okay, while the tax office will ask you DRC, if you pay under 3B, your matching of credit, etc., will get settled and it will go in the normal course for availing the credit by the customer. If you pay under DRC 03, then the other issue will come up whether, is someone he'll have to justify, yes, he has paid under DRC 3 and he has reported these transactions, etc. That may come up. That's the only point.
There is one dimension, in addition to what Saket pointed out, I wanted to bring out one dimension to it. There are two provisions actually. There is section 17(5)(I), which reads that any tax paid in accordance with the provisions of section 74, 120 and 130, credit on that will not be allowed. And then there is the rule 36 sub rule 3 also. No input tax credit shall be availed by a registered person in respect of any tax that has been paid in pursuance of an order where any demand has been confirmed on account of fraud, willful misstatement or suppression of facts. Now, one very interesting point that possibly emerges out of it is that that the revenue is taking is that as far as 17(5)(I) is concerned, it is restricted to GST paid under the GST laws. But when we talk about Rule 36 sub Rule 3, it also covers IGST paid under the Customs Tariff Act. And even that credit will be disallowed in case proceedings had been initiated under the relevant provisions of section 28, wherein 28(4) was invoked.
Correct. I think the important aspect here is, number one, in accordance with section 74 that appears in 17(5)(I), and pursuant to the phrase pursuant to that appears in Rule 36(3). When is a tax said to be paid in accordance with 74? So a tax can be paid in accordance with 74 only after a DRC 1A at least have been issued, because prior to issuance of DRC 1A there is no proceeding under 74 that is pending. So at least my view is that only any tax paid prior to issuance of DRC 1A is not covered under that restriction. Alok, any thoughts on this, or we can any closing thoughts, so that I think we are already overrunning the time. With your closing thoughts, maybe
so, it's a very good technical discussion. No closing thoughts on this part, honestly.
Sure. Any closing remarks?
One point, to answer your point on DRC, when does it close? See, typically in these kind of cases, in my view, it will be parallel longer litigation for both the cases. That is, the provider, obviously, the supplier would obviously litigate, even if your first level appeal or first level adjudication he confirms under 74, because eventually he will always confirm under 74.
Correct.
However, he would have to litigate maybe at a higher level. It is said that it's not under 74, there was no fraud suppression, he is able to prove that. Then it will not be 74, it will then automatically get into 73. In those situations, my credit or the recipient's credit is then linked with what happens to the litigation. Hence, it's a long drawn process. So if the best course is, as I said, that you don't pay this amount, but if you pay this amount, then you will have to be ready for a litigation. His litigation would have a bearing on your litigation.
Well, thank you so much. Thank you so much, everyone, for your time. Thank you, audience. I hope this was fruitful and useful session for you. Ashish ji, over to you.
Thank you.
Thank you.
Thanks, Sandeep, Saket, Lalitendra and Alok for an interesting and interactive session. Audience, thank you very much for your contribution through questions since morning. Tea, coffee is ready. Before you call it a day, if you want to grab tea, coffee, please feel free. And thanks to all of you once again. Just one digital evidence before you leave. Sure. Thank you very much.